It's the head of equities at Royal London Asset Management, Jane Coffey. She manages their United Friend, the UK Growth Fund, as well as the Royal London Bridge Equity Fund. Jane, really good to see you. Can I just have a quick comment, because it's just broken. The gold futures, $1,600 an ounce. That just shows you just how much nervousness there is on all the markets except that one.
Well, I think that's true. Gold really reacts to nervousness in the validity of currencies, and when you've got banks under pressure, when people don't really know whether the US are going to manage to keep their AAA rating this week, when the European Commission and the Europeans have to get together later on this week to really put something together about Greece, a lot of uncertainty, gold goes up.
To what extent is it good news that out of 90 lenders, only 8 banks failed? Should we take heart in this?
I think we would if we felt that the stress tests had been really stressful. I think obviously, as you've mentioned many times before so far this morning and last week, the fact that they can't put in a sovereign default scenario does make it difficult to really take these seriously.
But on the other hand, those banks that failed, the figure here, the regulators say that 8 of the 8 that failed, they'll need to only raise 2.5 billion euros in fresh capital.
Yeah.
That's nothing.
No, that's nothing, particularly not compared with what has already been raised by the banking sector. However, what some of the research that I've seen coming out initially post these results over the weekend shows that analysts have been looking at what would happen if you did have a sovereign default across the different banks. Now we've got the information, and I've seen figures of 23 billion for if it was just Greece, Portugal and Ireland, or 63 billion if it were for including Spain and Italy.
Let's move on to the earnings. We're into the earnings season again now, and those Philips results. Now, their shares are up about 2.5%, but that was a shocker of a loss, presumably trying to get it all out of the way. Were you convinced by the CEO that we just heard from saying that by 2013, they'll be back well on track? Have you got confidence in him? Those shares are way, way down.
They are. I think, I didn't actually hear him just this second, but I think looking at what we already knew from Philips, we already had the warning that underlying business was weak in some of their consumer areas, particularly lighting. What's good about today is that they are doing something about it. So yes, they're taking the provisions, but they're also doing more cost cutting, and they must have some confidence because they're buying back shares. And I think this is something that we hope is going to happen quite a bit more across Europe, so that companies have very strong balance sheets, and therefore, you know, they can add value by actually buying back those shares and, you know, having a much more efficient balance sheet.
Yeah, shares up 2.5% already this morning. Jane Coffey, really good to talk to you. Thanks very much.